Hey everyone, welcome back to my YouTube channel. For those of you that don't know, my name is Miguel and I love everything personal finance and fitness related. More finance content than fitness content lately because I recently blew up on TikTok, giving me a little bit of a following here. But whether you're coming from YouTube or you're coming from TikTok, welcome. And in today's video, I want to go over how I personally choose stocks that go into my dividend investment portfolio. But before we do that, don't forget to subscribe if you haven't already. Feel free to leave a comment if you have any questions and I will answer them. And don't forget to leave a like on the video, it helps me out a lot. So let's hop into it. Now before we go over how exactly I invest into certain stocks, I think it's important to understand my strategy and my plan and how I personally want to see my dividend portfolio grow over the next coming years. But before going over my entire strategy, you should probably know what a dividend is if you don't know already. All that a dividend is a company paying its shareholders its profit. Kind of like a reward for believing in them and putting your money where your mouth is and buying some stocks of their company. After you know what a dividend is, you should know what a dividend yield is. A dividend yield is a percentage that the company is going to be paying you back as a shareholder. This can be on a monthly basis, a quarterly basis, and sometimes annually or biannually basis. Now you know what a dividend is and what a dividend yield is, we can talk about dividend investment portfolios. Not all stocks pay dividends, that's why I personally have a specific dividend investment portfolio that I'm trying to grow here. When I first found out about dividend investing, I was really fascinated. You can grow a portfolio of $100,000 and get $40,000 a year of passive income. And that's where my journey into the stock market kind of began. I want to grow a portfolio of at least $100,000 and be getting $40,000 a year of passive income. It absolutely blows my mind that not everyone knows about this form of passive income. Now just because you grow your portfolio to $100,000, that doesn't mean that you're necessarily going to get in that $40,000 a year of passive income. A really important factor to keep in mind is dividend yield. I've talked about the 4% rule in the past video, but essentially you want to keep your entire portfolio at or around 4% for it to be considered quote-unquote safe. And the 4% dividend yield is what I want to keep my portfolio at. Just because if you keep it around that 4%, companies are less likely to cut their dividends and they're going to continue to grow and want to reinvest those dividends back into the company. Now that I've expressed to you my goal of dividend investing, trying to get that $100,000 portfolio while getting $40,000 a year of passive income, and keeping that 4% rule in mind, I can now show you how I look into stocks and how I ultimately choose which stocks are going into my dividend investment portfolio. So for this example, I'm going to be using AT&T. So currently AT&T, I personally have 15 shares at an average cost of $27.82. It makes up about 5% of my portfolio, and I have a total return of $29.48, or 7.06%. Now typically the first thing that I do when I look into a company is I go down and look at the dividend yield. Like I talked about earlier, dividend yields are kind of important because that's the percentage that you're going to be getting back in AT&T's case on a quarterly basis. But AT&T's dividend yield is at 6.99%, which means for roughly that $28 that AT&T is valued at in the stock market, you're going to be getting about 52 cents per share. As we can see, the last time that they paid me dividends, I had 13 shares and I was getting 52 cents per share. So I got a total of $6.76. Now the next number you're going to want to look at is the market cap. So AT&T's market cap is currently at $212.30 billion, which is pretty high. This number is not crazy important, but when you're looking for a company to invest into for long term, you definitely want that to be at least in the billions. Now when I do invest into a company, I'm investing into them for the long term. That means 25 plus years. So every single stock that I have in my portfolio, I plan on holding for 25 plus years, which is important to keep in mind when I'm doing my research on which stocks I'm going to buy. The next thing that I did when I was looking into AT&T or when I look at any other stock, I'll go to the year mark and I'll say, okay, as we can see, AT&T fluctuates a lot. After the year mark, I want to hit on the 5-year mark and say, okay, in the past 5 years, they've gone down about $8 or 22.92%. So this can mean a couple of things. They're either struggling in business, which I think we know AT&T is doing just okay. But with a little bit of research, we can see that AT&T is about 1 year away from being dividend aristocrats. A dividend aristocrat is when a company pays and increases their dividends for 25 plus years. So AT&T has a lot of incentive to continue to pay their shareholders their dividends. And yes, they have gone down in value a little bit, but I'm a firm believer that this is because they continue to put their money back into their company. We see this with them buying DirecTV. We saw this with them buying Spectrum 5G, and now they have HBO Plus and things along those lines. Okay, yes, they have been going down in value, but they have all the potential in the world to go up in value and to continue paying those dividends with almost being dividend aristocrats. So along with AT&T being dividend aristocrats, they are in the S&P 500, which just because a company is in the S&P 500, that doesn't necessarily mean that they're a good company to invest into. But we can say, okay, it's in the S&P 500, so it has some value to it. And obviously the top 1% of the United States believes that it's a good company, so maybe it is. Now, typically the next thing that I usually do is try to find a dividend safety score. But since AT&T are now dividend aristocrats, it's a fairly safe dividend stock to invest into because they don't want to jeopardize losing that dividend aristocrat, and now they're going to be on their way to be dividend kings. But like any other stock, with a few clicks and a few Google searches away, you can definitely find their dividend safety score. DividendSafetyScore.com is a service that you can pay for. I personally don't pay for it. You can almost find pretty much every dividend safety score for free online, but there are also a lot of other YouTubers that pay for that service for you, so you don't have to. So now at this point in the process, you understand the dividends that they're going to be paying out. You understand their dividend yield. You understand their market cap. You understand the value behind them. You understand where they're going in the future. Now the last step is just to understand if it's at a good buying price or not. Now when I was first buying AT&T, I did some research and I found out that AT&T is at a good buying price when it's at or below $27. But of course the golden rule is time in the market always beats timing the market. Meaning that you can wait around for it to drop to $27, or you can just start investing and getting those dividends quicker. This is something that I had to learn. I could have been getting paid dividends a lot sooner, but I was very timid and I was waiting for the right quote-unquote buying time. There is no right buying time. You are losing out on passive income the longer you wait to jump into the market. And that's it. That's my entire strategy as a complete beginning investor. Investing into stocks is not hard. Doing the research into which stocks you want to invest into is not hard at all. What makes it hard is overthinking and feeling like, oh, now is not the right time to get into the stock market. There's never going to be a quote-unquote right time, so just get out there and start building that passive income. If you're new to investing, I hope this video helped you out a lot. My goal is to help other beginning investors like myself start building their passive income portfolios through dividend stocks. Keep in mind, I still am fairly new to investing. I've only been investing for about a year, but that's my process and how I think about and how I do research on investing into certain stocks. If you have any questions at all, feel free to leave it in the comment section and I'll do my best to answer them. Don't forget to like the video, it helps me out a lot, and subscribe if you haven't already. Again, thank y'all so much for watching, and I will see y'all in the next one.